All right.
Yeah.
Now we're live.
Now we are live.
Live in front of
I
everyone.
better stand up because.
Yeah, you can. I
Uh,
don't mind sitting down. It's nice. Make sure we're all set up here. Just don't hit your knee here.
nope.
That's the main thing.
That's right.
Yeah. No, Bernie, the volume is on today. Everyone can hear. Test, test, test. We see the microphone.
It's moving.
If you're online, give us a thumbs up. Let us know
Yes.
that you can hear us. But anyways, my name is Jonathan Clem, and I am founder of Quality Builders. So we're a local Chicago general contractor that specializes in renovation loans, which is one of the reasons I had Jose here today. And I always like to start with gratitude and praise for every time we come out here. So
Amen.
everyone who's here in person,
Yes.
thank you so much, all you there in the back row. I know there's too many people. You guys can't all squeeze in. But yeah, we appreciate you guys making it out here on a Saturday morning. And I always remind everyone, like, people will get up on a Saturday
Yes.
and come to work on themselves outside of their 9 to 5. Those are the people who are taking action, making the steps to go in the right direction. I always remind myself that I'm always trying to be different and take a little bit different path than everyone. So when you see the escalator, I'm the one taking the stairs.
I love it.
So when everyone home is at home and sleeping today, you guys are out here making things happen.
Mm-hmm.
I also always like to thank Emron Khan, who's an attorney here. We're obviously at his place, Emron Khan. He's also a title insurance company. He has All-Tech Title, national title, and they're licensed in 31 different states. So if you're in need of any title or attorney work in the real estate space, connect with me. I can connect you guys with Emron. But yeah, I'm always super grateful to have this space available and super grateful that everyone's able to come out here and make it. For us at the Chicago Quality Investors Meetup, I always remind everyone of their MINs, the most important next step. And all of us have some type of step that we're taking next.
Yes.
And I think for me, the most important thing is figuring out what that next step is and then figuring out how to take action as quick as possible. One of the ways I'm always trying to take action is in the giving fashion. And so I always like to open up with a question to see where everyone is at in the audience as far as their real estate investing career and who might know what their most important next step is. Any thoughts on your most important next step? Christy?
Yes.
Yes.
Good morning, everyone.
Good morning.
Good morning. My name is Christy Augustin, and I am currently working on obtaining my MLO license.
Oh, well, beautiful. Now you have Jose here
Yes.
to steer you in the right direction. And so now you can go from good to great. I'm
Mhm.
giving it to you. So if you already have it, you can give it away to someone else. But now you can go from good to great in the mortgage world. And the other thing I try to do is I'm on the board at the Boys and Girls Club. And so there's a QR code in the back, and I'll share it online at the end. If you can donate to that, be super grateful. QR codes in the back. And then, yeah, lastly, I just like to remind everyone to make sure you're educating and reading. So that is the most important thing for me to get started. Make sure you're networking.
Yes.
Come in here, you're on Bigger Pockets, any of the Facebook groups. And then lastly, and probably most importantly, is just taking action. I know for me, it's super easy to get stuck in the analysis paralysis. And the quicker I've actually made a decision, the happier I actually am. And so I always just encourage everyone, get about 80% ready and then pull the trigger, because the last 20% you're going to probably learn on the fly anyways. So I'm super grateful to have such a large group here today. And I'm super grateful that Jose has volunteered his time. He's been in the industry for nearly 30 years. I was trying to figure out the math on LinkedIn. I just figured I'd go with 30.
I started when I was 2 years old.
Okay, 2 years.
Yeah.
But yeah, he's different than most lenders, because most lenders are shying away from the renovation loan, where Jose is walking directly into them, which I can greatly appreciate, just because it's not the easiest transaction to handle. But I've always told anyone and everyone that if you can get one of those loans to work properly, you have the right team, it actually ends up being the golden ticket to some instant equity
Yes.
right away in your projects. And so I'm super grateful to have you here. Super grateful to dive into the renovation loan space. I was driving here today. I saw one of those billboards, Cross Country Mortgage, and it says
Yeah.
1 out of 44 mortgages is a
Yes.
CCM loan.
Yeah.
And I had to figure out one out of those 40, probably or 5 of those are probably a renovation loan. And of those 5, you're probably doing 4 of the 5 in Chicago. So if you're doing a renovation loan, you got to talk to Jose.
Yes.
But yeah, so I saw those signs. I thought that was good marketing.
Yep.
So I wanted to kind of just let everyone get to know you a little bit better. Can you give us like a little bit of rundown of like where you're from,
Sure.
where you're raised,
Yeah.
what happened, what'd you eat for lunch when you were
Yeah,
a kid?
absolutely.
Just let everyone get to know you a little bit
So
better.
I was around the corner getting a cup of coffee. I'm not going to name the place, but it took 20 minutes to get this cup of coffee. So if you want to ask me where to avoid getting a coffee, if you're in a rush because you're in the Midwest, don't go there, right? But I was born and raised in the north side of Chicago. I'm a child of immigrant parents that came from Mexico. They landed in Rogers Park and was there for about 20 years. So we were just talking about being raised in different neighborhoods in Chicago. And, it's something that I actually appreciate because I know everything about Chicago now. You get to learn all the different cultures. And, the last half of my life, up to the last 20, I've been in the suburbs. So I got to, when everyone's driving slow in the suburbs, when I first moved in, I was the fast guy. Now I'm the slow guy. Yeah. So it's weird to come back to the city and drive slow. I'm like, all right, I gotta switch it up because or else I'm gonna get ran over. But been in the industry, in the mortgage industry for about close to 30 years. I started in the banking side as a teller. Got plucked out of the teller line and into becoming a loan officer assistant. The only reason I went there is because it paid $1 more. At that point, I think I was making $8 an hour. I'm like, that pays $9. I'll do that. And then they told me within 6 months, you're going to be a loan officer. And I didn't even know how to spell mortgage. I didn't even realize it had a T in it.
I still don't know how to spell it. Every
right,
time I'm like MORTGAGE. I hope it's right.
Yeah. And then quickly fell in love with it because I love people. I love helping others. And being from immigrant parents and 25, 30 years ago, there wasn't a lot of bilingual loan officers in the business. And so I was privileged to have my mom be a huge advocate for me at the factory that she worked at because she'd bring her my business cards and pass them out to all her friends. So it was a great springboard. And then 5 years into it, I fell in love with renovation lending. So I've been doing renovation lending as a specialty now for the last 20 years. And I mean, talk about falling back in love with the business and really generally falling in love because there's no other product, in my opinion, where you can customize a home and make it your own all in one outside of building a brand new house. So that's kind of like my history. I've been in several companies. I'm glad to be at Cross Country Mortgage. I have my own brand and I was lucky to team up with Jonathan here. We've been doing some great projects together. So this is awesome. Thank you for having me.
Yeah. That's quite the introduction.
Yeah.
To be honest.
Thank you.
Yeah. And we talked about new construction actually last month.
Yes.
And I think everyone learned how expensive it truly is. So I think, now is the time to get creative with your financing and figure out ways to build your forever home.
Yes.
On your own, right?
Yes.
Not let someone else build it. And that way you can bring all your creative ideas to the table.
Mm-hmm.
Did you ever think about doing anything else besides mortgage lending or talk about how it was helpful to focus in on one thing? Like, I don't think you've ever made any
never deviated. At one point I was going to do the real estate side, the realtor side. And I said, that's going to sacrifice. I wasn't willing to sacrifice my evenings and weekends. So I give my hats off to all the realtors that are in the business because it's a grind, right? It's weekends, it's evenings. And so for me, I wasn't willing to do that because I have kids. And, now today, would I consider it? No. I love renovation. I love lending too much and I love renovation that much more. So no, not outside of being a dancer, nothing else I've considered.
I used to go to Chicas Bonitas
Bonitas
down in Texas. So Maybe that was one of your spots back in the day.
Maybe. And chicas bonitas is pretty girls, whoever is out there translating.
Anyways, so digressing a little bit from the dancing,
Yeah.
jumping back into the renovation loans. Obviously, kind of the two most familiar products are typically the 203k, the FHA 203k,
Right.
and the home choice Homestyle renovation loan.
Yes.
Can you kind of just like briefly run through each of them and maybe touch on some differences so everyone can get a kind of groundwork for when they might use one over the other and what
Sure.
are some advantages, disadvantages to both of them?
Yeah, absolutely. And the similarity between the two is that renovation loan, think of it like an umbrella, right? And then below the umbrella, there's drops coming down, right? And they're two different buckets. You're either gonna fall into an FHA bucket or the conventional bucket. The FHA 203k, and it's in the simplest manner that I can explain it, it's an owner occupied only type of loan. So versus a conventional, you can expand beyond owner occupied into investment and second home. So the beauty and the simplest definition that I can give you on a renovation loan is that it's a dual purpose mortgage that covers the as is purchase price of a home plus the cost of renovations. And that applies to both the conventional and the FHA. So what I love about FHA is that you can go all the way down to a 600 credit score. So that's the perfect client. Someone that has maybe some blemishes on their credit report or have come out of bankruptcy in the last 2 years or have maybe had a property foreclosed on in the last 3 years. This is a perfect product for them. It's 3.5% down and that total acquisition, which is purchase price plus the amount of rehab. On a conventional program, it's 5% down. So if I have someone that has only 3.5% to put down, and that would be a perfect product for them. And if they have some blemishes on their credit, and conventional, bless you, and conventional, it's 5% down on the total acquisition. And it not only applies to owner occupied properties, but it also applies to investors. So if you're a first-time investor or a seasoned investor and you're looking to get into a single family, you can go in with as little as 20% down on the total acquisition on that one too. So I would say that that's the biggest difference between the two.
And yeah, so with the Homestyle, you can actually use it for an investment purpose.
Yes, on single family only.
Okay.
Mhm.
And I want to say for 2 to 4 units, you can use it, but your down payment's like 15%.
So it's actually changed, Jonathan. That's a great thing on investment on owner occupied. It was true up to maybe a month or two ago. Conventional financing, you had to put at least 15% down on a 2 unit and up to 25% down on a 3 or 4 unit. FHA was having too much fun with that because you can do as little as 3.5% down all the way up to 4 units. Conventional said they're having too much fun over there. We want to join that party and we'll do 5% down as well, all the way up to 4 units. So it's a huge lift to the market. And another thing that FHA has is that the property has to be self-sufficient. It's a self-sufficiency test that you have to pass. And what that basically means is all the rents that the property is generating has to equate to or exceed the mortgage payment. So if your mortgage payment is $4,000 in FHA and you're buying a 3 or 4 unit and that mortgage payment is say $4,300, that property is all the rental income comes in less under that property is not self-sufficient. Conventional doesn't have that rule, which is really nice. You can go all the way to 5% down without having to pass that test.
And then the other thing I think that typically comes with the lower down payment is the PMI, right? The
Yes.
principal mortgage insurance.
Correct.
Can we touch on that? How
Yeah.
it goes away, what exactly it's
Absolutely.
for, and why someone may or may not want to go FHA because of it?
Yeah. So with FHA, you have an upfront mortgage insurance premium. It's a fee of entry. So FHA charges you 1.75% of your loan amount to take out an FHA loan. And the reason that money is there, it's a pool of funds that's there just in case someone defaults. The lender pulls it together and then that money recovers that. That can be expensive depending on the loan size. You don't have that with a conventional. You don't have that upfront mortgage insurance premium. It is financed upfront, so you don't have to pay that out of pocket. But when you're putting 3.5% down minus your 1.75 that you're financing, in reality, you're only putting in like 1.25%, because 1.75% of that is being eaten up by this upfront mortgage insurance premium. You still have the mortgage insurance premium that you have to pay every month. And I'll tie this in really cool with the renovation lending, by the way, Jonathan, because it makes sense why someone would want to do renovation financing. Unconventional, you don't have that upfront, but you do have the monthly. And mortgage insurance, just so everyone knows, right? It's whenever you're putting less than 20% down, you have to pay this extra insurance. It's just common knowledge. You can get rid of it after 2 years once you've gained enough equity and you can show that you've made your mortgage payments on time. And the way I'll tie this in with renovation financing is the whole idea behind buying a property is that you're buying it as is, you're putting money into it, and your hopes is that ARV, right, that after repair value comes in above your acquisition. So if I'm buying something at 200 and I'm putting 100 into it, my expectation is that it's not only going to be worth 300, but it's probably going to be worth maybe 320, 330. So I've already got some instant equity so that when it's time to remove that mortgage insurance, I've already got a leg up.
Yeah, I think that's the
Mm-hmm.
Burr method in
Yes.
real estate investing, the buy, rehab, rent, refinance, repeat. If I got them in the right
This
order.
guy's got them all. I got to learn all these acronyms, man.
But yeah, I think that's, that's how it worked on one of my properties. I bought it,
Yeah.
put in the work,
Yes.
refinanced, got
Mhm.
rid of the PMI because I had my 20% equity. And I mean, that's
Right.
the golden ticket when
Yes.
you can follow that process. And, oftentimes, like, especially now, like, more than likely, there's still going to be money left in the
Right.
deal. You're not going to get your full 20% back, but in my opinion, anything that you can pull out of that and
Mhm.
use to take to the next deal is always going to be, worth its weight in gold, because there's nothing
Absolutely.
like having a bunch of Benjamin's cash in your
Yeah.
wallet to take to the
Yeah.
take to the
Take
next
to the next
investment.
investment property.
The
Yeah.
one other tip I want to make sure we touch on with the renovation loans, remind me, you can actually defer the first 6 months of
Yes.
payments. I want to make sure everyone knows this
Mhm.
tip, because I didn't know about it. And you mentioned it to me the other day and I was like, what? This is news to me.
Yeah. We were just talking about it during the happy hour from 10 to 10:45. Donuts and coffee for those that think we're drinking at 10 in the morning. But so we were just talking about this. It's an amazing feature where if you want to stay put in your house or in your rental and pay that mortgage or that rent and not have to pay a different mortgage at the same time, you can postpone your first mortgage payment into month 7. Essentially, what you're doing is if your mortgage payment is $3,000 and we can justify that that house will take 6 months to renovate where you cannot occupy it, you can roll in 3 times 6, $18,000 on top of your rehab budget. So when you think about that over 30 years, it's maybe a difference of $20 or $30 more per month, but you don't have to make a mortgage payment until month 7. So someone that's closing in February, their first mortgage payments as is February 1st. I'm sorry, April 1st, because you always skip the following month. So their first mortgage payment is not going to be until November. So it's a great feature for those that want to buy something, stay put, and not have to carry a different mortgage at the same time. Yes.
Would that first mortgage payment in November be at a similar price, or would there be added fees on top of it for deferring it?
Great question. No, it's the mortgage payment that you closed with. So I hope everyone heard that, will the mortgage payment be different once it starts? And no, if your mortgage payment at closing was $3,000 for 360 months, if you took out a 30-year mortgage, it's still $3,000. Yes.
And just
You're
to
welcome.
confirm, which programs does that fall under? Is it
Both
two-
conventional and FHA.
Okay, so basically almost any loan that they're doing with you in the renovation or conventional space, they can defer that now.
They can defer it. I had a wise customer ask me, and I'll get to your question in a second. They're like, well, can I move in and postpone my first mortgage payment? I'm like, that's not the definition of it. It has to be uninhabitable. So the property has to be deemed uninhabitable. And if there's a consultant involved in this that tells us how long the project will take. So if Jonathan is saying it's only going to take 3 months to complete, well, we can defer 3 months. Okay, yes.
Okay, but after you defer 3 months, will your 3 months interest payment also gets deferred into the loan as well, or it doesn't get considered at all?
It is considered because you take those 3 months in that example, let's say it's $9,000, you're putting that on top of your mortgage amount. So if you were originally borrowing 300,000, now you're borrowing 309 over 30 years. So you are paying interest on that. It's not for everyone, but it's for those that want that feature.
Okay, yep.
Mhm. Yeah, great
Okay.
question.
Cool. Yeah, so Jose, let's just really quick talk about kind of the renovation process.
Sure.
What the expectations should be for a client to have a smooth transaction. Like what can everyone do on their end
Yep.
to help make this process smoother? Because we already know it's a little more laborious from a documentation standpoint for you as a lender, for us as the general contractor. There's, multiple different players involved. Like what's one deal that you've seen gone really well, and like
Mhm.
what did that client do to kind of help that process?
Sure. They picked the right team. Let's start there, right? They, and we're going to say it over and over, but every successful renovation loan that I've had a great team around it. It's with a great lender, with a great contractor, with a great consultant, and a mortgage company behind that lender, right? And I'll take it a step further, the right loan officer. And I'm not plugging myself, but do your due diligence, guys. There's so many lenders that claim to do renovation lending just because they want to offer that and not let go of that deal, especially if they're not doing a lot of business, and then they botch it up.
Mhm.
Right. So, but when you have a great loan officer that's does them consistently, they know what's going on and they know how to, handle the ball and get it to the finish line. So the ones that I have not seen successfully close are the ones, and I've heard the nightmare stories because I inherited a lot of these deals. Customers come to me and say, it's been 90 days. I haven't been able to close my loan. And then I run with the ball and we get it done in 30 days because I get my team around it. So 80% of the success, and I'm going to really, applaud you, Jonathan, because 80% of the transactions that don't close on renovation lending is because they started with a bad contractor, a contractor that doesn't know what they're doing, or they're taking forever with their numbers, or they're not breaking down their bid properly, or they have their, they're insisting on getting some money up front to get the project started. For me, the sign of a good contractor is one that has their own funds to get the project off the ground. Because a contractor that's asking for money up front makes me a little bit nervous, because if this is your profession, you should have some startup money to get the project started. We will pay out as work is being done. So it's not like we're waiting till the end. So I hope that kind of answers that question, because for me, it's all about picking the right team. You guys come in and educating yourselves first before you're even out there looking at something says a lot, right? You could be anywhere else on a Saturday morning, but the best education that we can give people is start early. And I'm just going to ask the audience and you guys all the way in the back, I hope you can hear me. When is the best time to look for a contractor?
Yes.
Yesterday. Yes, right? Yesterday. Yeah. And another great answer is when you don't need one. Right? Yeah. It's almost like having insurance there just in case. You want to do your due diligence and say, all right, who am I going to use? Should I go out? If I go out there and I find a property that needs rehab, I don't want to start looking for them then. I want to have that information ahead of time.
Yeah, I think that probably goes for everyone on that team, right, Nick?
Mhm.
Because I think different people get plugged in at different times.
Yep.
But the person who already knows who's on their team before they write an offer, right? Before they even start looking at places, they know exactly who they're turning to
Correct.
to get the answers they need, because it's very like muddied process, Titan's going to go look for his renovation property. He's going to start maybe with an agent, right?
Yes.
Who may or may not have done a 203k loan process
Correct.
before, which also very key is your agent.
Yes.
Or he may start with the lender. I'm always going to point someone in a direction. It's like, go get your pre-approval and like know what your buying power is
Yeah.
first. Like
Yeah.
that to me is step number one,
Right.
no matter what, is to understand your purchasing power. And then once you have that, now you can start isolating some markets and areas you want to look at. And, but then let's say Titan goes ahead, he writes an offer.
Right.
Okay. Offer gets accepted, FHA 203k. Like, what's the next process from there on when you should be involved, when I should get involved,
Right.
when a HUD consultant should get involved? Like, what does that look like when it is done properly?
Yeah, and we'll start with Titan, right? So what I would prefer Titan to do is we're hopefully you and I have already met before you even got in the driver's seat, right? To go out and look for real estate. So you and I have sat down and you brought in your pay stubs, your W-2s, your bank statements. I ran your credit. I verified everything. I got you approved, whether it's renovation or not. You're mortgage ready. You know, you're approved for $1 million because you make a lot of money, right? So, so you're approved. So now it's, who is your realtor, right? If you're really interested, and I'm glad you brought this up, Jonathan, because the realtor is key. And I failed to mention that. If the realtor is not sold on renovation lending, do you think the customer will go that route? Probably not. They're going to dissuade them from going that route because maybe they're inexperienced with it or they had a bad experience. And that's an injustice, in my opinion, because you're showing them maybe this much property when you could be showing them this much and the potential of what they can gain in equity. So I would ask you, Tyne, right, who are you working with as far as a realtor is concerned? And you would tell me, right, I'm working with
Jake,
with Jake,
who loves doing
who
renovation.
loves
loans
renovation
as a real
lending.
estate
Yeah,
agent.
there you go. So you're going to Jake and say, hey, Jake, I got my approval here. Jose said I'm ready to go for $1 million. I want to keep it there because any more would kind of put me out a little bit, right? So Jake then says, all right, then you and I are going to have a conversation, right? Then I would pick up the phone and introduce myself and say, hey, Jake, I'm Jose. Here's my experience. Here's what you're going to run into. I'm going to tell you, this is not a quick close transaction. Don't bring me a contract and try to close in less than 2 weeks because there's too many steps involved. So the next step, so you and I would have that conversation. I would tell you, we need about 6 weeks on the contract to close. We can usually get them done in under 30 days. So you go out, you find a perfect property for Titan. He finds something that needs some work, but now you need to know exactly what it needs. So you go under contract because it could be a really hot property that may not be there tomorrow, right? So every market is different. Being in this industry for almost 30 years, before you could actually take a breath, right? And think about making an offer. Today, you take a breath, the property is gone. So you have to make an offer. You have to lock it up, right? Lock it up. And during the home inspection period, who do you think comes in next? That's where a contractor comes in or a home inspector. So you can go either way. But my preference is if it's a property that needs work and it's being sold as is, bring Jonathan in right away. He can give you an idea of what the project is going to cost to renovate it. Or you do bring your home inspector in, but then once you have the home inspector report back, it's going to tell you everything that's wrong with it. And then Jonathan can kind of back it up and say, okay, it's going to cost you X, Y, and Z to make that property yours. So Titan, let's say you found a $500,000 property. Now you know on paper that you have another $500,000 for renovations because and we're exaggerating all the numbers, by the way, but we're saying, all right, now Jonathan comes in and says, oh, I have $500,000 budget. Perfect. $500,000 is the bid, right? Now we know, but then I would go back to you, Jake, right? And I would say, hey, Jake, they're buying it for 500. They're putting 500 into it. What I'm very interested to know is what would appraise out for once it's renovated. So, because we're going to send an appraiser out to confirm that if you're buying it for $500,000, you're putting $500,000 into it. I want to know that other real estate in the neighborhood is selling for at least $1 million or more.
And I think the key right there is knowing what you're going to do in the renovation.
Thank you.
Because I think that's oftentimes what Titan might miss is he's like, oh, I want to do renovation.
Yes.
But then he comes us and doesn't know exactly what he wants to do.
Right.
And now when he needs to give the information to Jake to say, I'm actually doing the kitchen, the bath, the backsplash, the flooring. Now we have a clear vision of like what the comp, what the
Yes.
comparable should look like
There we go.
for the ARV. But if we
Mhm.
don't have a clear scope from Titan, then it puts a lot more ambiguity on the
Yes.
situation because we're not exactly sure what we're supposed to be bidding as the contractor. We're not sure what we're supposed to be looking for comps for
Right.
as a real estate agent. And then it just gets much more muddled. So I'm always making sure everyone has a very crystal clear scope of work.
Yeah.
And because that by far is one of the things I see that makes things go off track
Yes.
is when we don't have a clear scope because we can't give you the right bid. Oftentimes when you're doing a $500,000 project, you need plans and permits.
Mhm.
Well, but Titan doesn't want to shell out money to the architect
Right.
until he knows the deal is going to close.
Sure.
Well, I don't want to shell out a estimate
Right.
until I know what the actual plan's going to
Right.
be. So it gets into this like circular array
Mhm.
of not everyone not getting what they need.
Right.
And so my advice on every one of these renovation loans is like get the most money you can on the renovation side. So get 600,000 if you thought you
100%.
needed 5, if
Right.
you can qualify,
Right.
and then let's not use 100,000.
Yes.
But when all of a
Yes.
sudden there's like so many
Mhm.
projects lately that we're squeezing into this budget,
Mhm.
then something comes up and now all of a sudden everyone's panicking because we don't know where the money's going to come from. And so my advice is to get a crystal clear scope of work and then get more money than you need.
Yeah, and it's so this loan is I've turned people around. And I've told them you shouldn't look into a renovation loan because if you can't make a decision, this is not the loan for you because you don't have the time that you think you have to make a decision on what you want done to the property. It's not like you have money in the bank and you can close on it as is, and then you have money in your bank and you're just going to finance the project yourself. This loan requires you to make a decision on what you want done to the project. And that's where a good contractor comes in and kind of paints that vision for you too. You got to have an idea of what you want to do. And then everything else can get filled in with the contractor and your architect potentially. Because I can't do the next step without having the contractor's bid. So now I have the contractor's bid. I send it to my appraiser. I've confirmed with Jake that the value is going to be there in most cases. They give me my report back. The appraisal comes back at $1 million or maybe hopefully 1.1, right? Then we can go ahead and move to what's called the consultant phase. I'm sorry, even before the appraisal, I got Jake's bid. Now I'm going to send it to a consultant. A consultant is a third party that comes in and verifies the contractor's budget. So if Jonathan comes in at $500,000, but he undersold it because he's just trying to grab that project by $100,000, this consultant is going to catch that. He's going to say, how are you going to do this for $500,000 where everything else tells me that this should be a $650,000 project? So, or and vice versa. If he's coming in at $500,000, but maybe it should only be 300,000, we're gonna have that conversation too. So there's a little going back and forth on that. In most cases, they're right on target with that bid. So that bid basically is for protection for us as a lender, but it also gives that extra insurance to the borrower to say this third party independent that has nothing to do with Quality Builders, right? Or anything to do with Cross Country Mortgage and the Jose Valdovinos team, that's my plug, has nothing to do with it. They're just putting their report together. And they're licensed by the Housing and Urban Development to give a report that is adequate. And then with their report, we send that off to an appraiser who then gives us the value. Appraisal comes back. And then usually once we have that appraisal back, we can close within a week. Because by then we've already got Titan approved. We've already got the contractor validated. We've already verified his license and insurance and his background. So all that is done, we go to closing. The seller gets their keys. I'm sorry, the buyer, Titan gets the keys to his house, and the seller gets the funds. They get their $500,000 for the half as is price. And we start the loan for the construction the day after, as soon as permits are filed.
Yeah. I think the other thing too, you can include in the renovation loan, which some people don't always do, is you can budget in those soft costs, right? For the
Yes.
architect,
Yes.
for the permits,
Mhm.
these things. So you get a check, almost at closing,
Yeah.
that you can pay out. So if you pay the architect out of pocket ahead of
Yeah.
time, to get the project moving, which
Right.
I strongly encourage,
Yes.
you know, then you can get a check right away to pay them. You can also
Correct.
pay the permit. You can also, I don't know if you can do any type of legal or zoning things on there.
You can do a lot of that. Permits, you can do it, yeah, architect fees. And we also build in, by the way, a contingency reserve. So even though the contractor may come in at $500,000, we don't know that once he's in there working, whether something's gonna come up where you need more money.
We do know that's
Yeah.
gonna actually
And
happen.
it actually happens. Right, yeah.
Yeah, every project.
Has there
costs more
ever
and
been a
takes longer.
project that comes at
No,
budget? Never, right?
Never.
Yeah,
So
there's
just-
always over. So we build in a 10 to 20% cushion on top of the contractor's number in case of those cost overruns. And if you never use that money, it can go back to principal. Or, and I've never seen it go back to principal, by the way, because homeowners always find a way to use that money.
Yeah.
Yeah, which is
Oh,
great.
why not? Yeah.
They throw more, it's already baked into the payment. And if they throw it back, it's not going to change their payment. So why not do a little extra improvements to the house?
Yeah. I mean, the fact that the government's willing to lend you
Yeah.
the money you're using to renovate
Yes.
with 3.5% down, like
Yeah.
the leverage you're getting there is
Yes.
just like, no one's going to make that deal
Right.
ever anywhere
Yes.
on the planet
No.
outside of
Yeah.
that situation. So I'm
Exactly.
always telling people like, get as much as you
Yeah.
can and spend as much as you can
Yeah.
because you're not going to be able to find that type of ROI on
Exactly.
any other type of deal. And so when you're getting going, it's just the easiest way to get started.
Yes.
And I'm going to just ask kind of one last closing question and we'll get to some specific stuff from everybody. But
Yes.
as far as like market, where it's at, interest rates.
Yeah.
You got your crystal ball that I know is super accurate.
Yes.
Where are rates going to be 3-6 months, a year from now? What's
Yeah.
your kind of
Yeah.
thoughts on all that?
I'm going to
type of
shine the
stuff?
ball ahead and I'm going to let you know. Well, the good news is, guys, that rates are getting better. They are improving. So they're right now we're hovering under 7%, and we have not been there in a long time. We were pushing 8% for a long time. So what I can tell you is that we are on a decline. We are improving. So it's absolutely 100% a great time to get into real estate. It's always been a great time. I've always advocated for real estate because the old adage, right? Or you marry the house, date the rate. It's true, right? You can never renegotiate the price of the house. You locked it in, you negotiated, that's it. If the price goes up $500,000, no one's going to come back and say, give me $500,000 more because it went up in value. But when the rates drop, you can always renegotiate that interest rate. So that's a wonderful way to do it. So that's my prediction towards the end of the year. We're probably going to be in the low sixes, in my opinion.
Okay. Yeah, good to know. And yeah, my opinion too is like with rates high, now is the time to be buying because that's when everyone else
Yes.
is a little more timid.
Yes, right.
So
Yes.
if everyone's going this way, we should be going that way.
Right.
And
100%.
knowing that
Mhm.
if our properties aren't cash flowing a ton, as long as we're staying afloat,
Yep.
when all of a sudden things switch around and you can refinance,
Yes.
now all of a sudden your single looks like a home run.
Yeah.
So
100%.
yeah, I'm pushing people as much as they can to be buying. So
Yep.
yeah, I'll kind of open things up to everyone out in the crowd. If you guys have any specific questions for Jose or myself, happy to dive into some details. Yes, and just make sure we repeat the question so everyone
Yes,
online can hear.
absolutely.
So
So just curious, like, is there a minimum amount of years you have to stay within the property in
Mhm.
order to like get out and like sell it back?
Yeah, great question. So the question is, how long do you have to live in the house before you can move out and not get in trouble with the mortgage company? You're saying, yeah. So at closing, you're going to sign your 1003, your uniform residential loan application, and you're stating that your intention is to live in the property for at least 12 months. Okay. In some cases, it might be 24 months. Now, we're not the mortgage police. I'm not the mortgage police. You have to go in with full intention that you're going to occupy the property. You have to be honest about that, right? Now, if you're moving out within 6 months because of extenuating circumstances, maybe you got married and you're having a baby and you need more space. Absolutely. You can leave that behind as your rental property now and move into an owner occupied property. It just has to make sense. Does that answer your question, Titan?
Makes sense.
Okay, good.
As a buyer, are you able to use both products on multiple properties, or is it like your first property and then that's it? That's the only time you get locked into that 3.5% down or 5% down?
Yeah, great question. Can you use this loan product multiple times? You absolutely can. You can do it as many times as you want to. There's no limit on how many times you can use it. So I have buyers that have bought their first property with the 203k and then are doing the conventional investment Homestyle renovation program. I've even done it simultaneously where they've done both at the same time, because the rental income that they get on that subject property for the investment property offsets the mortgage payment, so they qualify fine. So you can absolutely do it multiple times.
The only thing right is you can't actually carry more than one FHA loan at the same time. right?
Correct.
So
You
you'd have to
cannot carry.
refinance that
Correct.
before you did another FHA loan.
And sometimes we'll have two FHAs if there's extenuating circumstances there too. Family size growing, things of that nature. But yes, that's correct.
And I think the other cool thing that we didn't talk about much, but we just went through is the VA loan. Because you
Yes.
can actually use both of those products
Mhm.
with VA and go down to as low as 0%
Zero down, yeah.
down.
Yeah,
which is just
underutilized,
insane.
guys. Yeah, our veterans, no money down. And there's no, you think about that, right? You can buy a house, no money down, use your veteran affair benefits and get a house as well.
So who qualifies for that? Can my dad who is in the army,
Mhm.
can I qualify, or only him? Can
Only
it be
him.
my brother or sister? Okay.
Yeah.
And is there any other specifics like on how you could qualify, or you had to have served? Like that's it,
You
period.
you had to have served.
Okay.
Yeah, that's basically how it works.
Dang it.
Yeah,
Okay.
but a lot of them do qualify. It's just a matter of looking at the particular scenario.
Yeah, but it's an insane process. So we were just working on a deal with my good friend Edgar, and he had
Mhm.
0% down,
Mhm.
$150,000 renovation, and like
Yes.
$150,000 purchase price
Yep.
with ARV of like 350 or
350.
380.
Yeah. So
And
the deals are out there.
yeah, and the only reason it didn't fall through was because of some, basically the way the money was counted for his purchase or
Yeah.
auto purchase or
Correct,
something
yeah.
goofy like that. But
Exactly.
otherwise,
It
the
would have been a
deal
great
would have been
deal.
sweet.
Yeah.
So
And I would say if you're out there, 'cause the audience hasn't asked this, but I know they're gonna ask it, so I'm gonna beat you to it, to the guy all the way in the back that's shy to ask. I know you're about to ask me. When you're out there shopping for a house and you're getting beat offer after offer, because that's the market, that's the season that we're in. I've never seen this in the 25, 30 years that I've been in it. I haven't seen so many offers not get accepted, right? I have clients who are out there shopping for a house weekend after weekend, and they're getting beat because on a house that's already renovated, on average, guess how many offers are on a house that's turnkey in today's market?
6. Yeah.
20 to 25 offers are being placed on a house that's renovated turnkey. True story. I thought they were giving away something. There was a line out the door on a townhouse that was $240,000, and there was a line out the door. And then because I was following this realtor's story, and she showed an island like this. It was probably 10 feet long. She had 32 offers to go through. So think about it, right? You have 1 in 32 chances of your offer being accepted on a house that's turnkey. Now, what do you think? How many offers are being made on a house that needs work?
Interesting.
0.
Way less, under 5. You're probably seeing 2 to 3 offers being made on a house that needs work. Those are the gems that you guys want to go after, because there's nothing that this guy can't do to a house. And maybe I'll turn it around a little bit. What's your biggest success? What's your biggest like transformation of a property?
I mean, we've done some interesting ones with
Yeah.
additions on third floors,
Yeah.
Extensions.
Yeah. That's cool.
Those are like more the complicated and complex ones that
Yes.
maybe I lose a little sleep over just trying
Yeah.
to figure it out and get so many people coordinated. But yeah, usually it's not the
Mhm.
super easy cosmetic ones, but I think those are the ones
Mhm.
that make the most sense right now
Yep.
for people who are thinking about getting into investing, right? Like you just said,
Mhm.
there's tons of contracts for turnkey properties.
Right.
So that to me says, oh, I should be flipping properties,
Yeah.
right?
Or
Because
flipping properties. Yeah.
now I know that if I provide a quality product in a time like right now,
Mhm.
I'm gonna have more than enough offers to get it sold. So
Yes.
my opinion right now is the flipping time,
Mm.
right? When everyone's worried about flipping, now is actually the time to be flipping because of how low the inventory is. Interest rates are high. That means demand is also high.
Yes.
And so my advice is to be flipping
Yeah.
anywhere and everywhere in a good neighborhood,
Yep.
and making those deals work. So I might go buy Edgar's property.
Yeah.
Now that
Yeah. Now they felt like right. Yeah.
because I think it's a good
Yeah.
deal, to be honest. I know you'll be around here
Mhm.
for a little bit.
I will be.
I want to kind of give everyone else a little bit of time to mingle. What's the best way to get a hold of you if someone online or in the crowd wants to do a
Sure.
renovation loan?
Yeah, I am accessible everywhere, but the easiest way is cell phone, 773-230-4700. 773-230-4700. Shoot me a quick text or just call me, and me or one of my team members will pick up. I'm accessible. We're working 7 days a week right now. I always like to say, I kid with Jonathan all the time, I have a wedding to pay for, so please do call me. Because I didn't realize how expensive that is. So just call me up, and I'm very excited. But no, in all honesty, I love what I do. I love renovation financing, and I can't thank you enough, Jonathan, for for teaming up with you, because for me, the only way that I'm going to be successful is by having a strong team behind me. And that starts with the contractor. So you guys, I mean, I would say definitely give Jonathan a call as well.
Yeah, I'd echo that too. And I've
Mhm.
worked with a lot of different lenders on the renovation process. And the one thing I meant to say earlier was that the difference with cross country, and not that I'm promoting you, but you guys do self-service the
Yeah.
loan, which is not important to everyone, but it's important to us as a general contractor, which basically means after Jose sells the loan, most officers are like waving their hand goodbye,
Yep.
good luck with the renovation, where his business actually are the ones paying us out on the draws.
Correct.
So that way, when things don't go perfect, which does happen, I actually can come back to Jose, who's going to have more leverage with his business to make something happen to get us paid sooner. So
Absolutely.
I just want to I
Thank you.
didn't mention that earlier, and I meant to. So yeah, any mortgage company that services their own loan is going to do a better job, in my opinion, on the front end, because
Right.
they know they're going to have to deal with something
Yes.
on the back end. And so, yeah, my name is Jonathan, Quality Builders Inc. on social media. I think we're on TikTok, even Instagram, Facebook, any of those other
Yeah.
places, and qualitybuilders.com. I strongly encourage everyone to invite friends to come in person. There's nothing like being in person. Meeting someone, having the energy, and finding the person who's gonna take you to the next step. That's how all of my relationships I've built have been, is finding people at these different meetups. And usually it's just one person out
Right.
of, the
Yeah.
20 or 30 people there that makes a connection that helps me along in my journey.
Love it.
And yeah, just to remind everyone again, is get comfortable being uncomfortable.
Yes.
And get out of your shell. We're all here to meet someone new and continue to grow together. So appreciate everyone for coming. And
Thank you so
very
much, Jonathan.
All right.
Appreciate it.
Take care.
Bye, everyone. Thank you. Bye.